Good evening, everyone. Today we are going to discuss one question which is related to A level accounting from the chapter Club and Society. So, in question number 1 of the financial accounting, in this question we have receipt and payment account, and the debit side of the receipt and payment account is your receipts, and the credit side of this is your payment. Okay, so from this it is clearly visible to you, like this is your opening balance and this is your closing balance, because this is in the debit side. It indicates that you are having a bank overdraft. Okay, so bank overdraft is your current liability. Moving forward to the question, answer the following question in the question paper. Question are printed. This is the line from your past year paper. Number A point is explain one use. They want you to explain any one use of the receipt and payment account. So what is the uses of receipt and payment account? So number one use is, first of all, you know this thing like receipt and payment account. Basically it's a summary of what? Summary of cash and bank balance. Okay, means whatever the cash inflow or bank amount inflow or outflow, we can record it in our receipt and payment account. So we can use this receipt and payment account as a summary. Okay, another use is we can get our opening as well as the closing balance of cash oblique bank. Okay, the third use is it helps in preparation of financial statement. Okay, so these are the uses which are very common. Maybe you know all these uses. Okay, now moving forward, there are some additional information in the question in front of you. So what are the additional information? First of all, we are going to read the first point, membership subscription. So you are having membership subscription, arrear and advance. Okay, this is your 2017 balance, again 17, but this is from 1st January, this is from 31st December. So it is clearly indicates this thing like this balance, which one is the opening and which one is the closing. Okay, the balance which is from 1st January 2017, this balance is your opening and this balance is your closing balance. So for this, what you have to do, you have to prepare the subscription account. Okay, they did not ask you right now, but later on when you going to prepare the income and expenditure account, then you need your subscription account as income. Then you find it out like you have to prepare that subscription account. You need a balance. Okay, so how are you going to prepare the subscription account? Balance brought down, balance carried down. O P P O means owing opening balance. Owing, it means arrear. Arrear opening balance is 840 and closing is 1440. Okay, then again you have to write balance brought down here and balance carried down here. Here you have to write opening balance of P means prepaid means advance. So opening balance is 480, so we have to write 480 here, and closing balance is 240, so we have to write 240 here. Now from the receipt and payment account, you can take your subscription received during the year. So membership subscription is 21,000. It is clearly visible here, 21,000. So we can write it here. 21,000. Okay, after adding these three, and then we have to deduct these two, then whatever the balancing figure we have to record it like this: income and expenditure account. Okay, this is our 21840. Okay, so this is the balance of subscription which we are going to transfer in our income and expenditure account. Okay, the next, from the second point, from this, there is other assets and liability. Assets having the opening balance, liability also having the opening balance. First of all, this is your inventory, means opening inventory and closing inventory. Gym cost, gym equipment cost 15,650, 15,620. Okay, then wages owing and rent paid. Now what you have to do, first listen to me very very carefully. Whatever the expense you are having, your expense may be owing or maybe prepaid. Okay, and owing also having opening value as well as closing value. Again, prepaid also having opening balance or closing balance. Okay, so what you have to do, because owing is your liability. Okay, so liability, closing value of the liability you have to add, opening value of the liability you have to deduct. Same way, prepaid also you have to do. Opening you are going to opening you are going to add, and closing you are going to deduct. Okay, so we are going to follow this for calculating the wages. Okay, so wages owing. So first of all, what is our wages? Wages, from this it is given 7,900 here. So wages is wages is 7,900. Okay, and wages owing, it means here the owing opening is 700. So owing opening 700 you're going to deduct. Okay, owing on 1st 2017, and owing on 31st 1 2017, which is your 800. So you have to add it, because owing closing we have to add it. Okay, so what is the balance of the wages now? It is 8,000. Okay, and same we have to do for the rent. So again, rent, from where we get to know like what is our rent. So rent for sportswear is 790. Okay, so here I have to write 790. 790, and the rent advance means prepaid. Opening is 1200, so opening we are going to add. So add advance on 1/1/2017, which is 1200, and we have to deduct advance 31st 1/2017, which is 1400. So after solving this, our answer is 4,600. Okay, now the thing is clear to you, I guess. So in the third point, they told you to put a depreciation on gym equipment. Okay, we can do it. How are you going to do that? So the equipment, what they are going to tell us, they give all the information okay, related to the gym equipment. The opening value of the gym equipment we have 15,625, and the clothing also we are having, okay. So we have to write down the cost of equipment, which is 15,625. Then we have to deduct the depreciation, okay, because this machine runs from the 2017, okay, and 2 years. So we have to calculate 2 year, but by which method? Reducing balance method, okay. So 15,625 into 20%, so 20% we have to calculate it on, and the 3125 it is, okay. Then what value we have? 12,500. Then again we need to calculate the depreciation, but because this is WDV method, okay, written down value method, so 20% is charged on this value, okay, 12,500. If it is straight line method, then instead of the 12,500 we have to write 15,625, okay. I hope this thing is clear to you. Okay, so this after calculating the depreciation for the second year is 2,500. So our net book value is 10,000. Okay, next is all donation are capitalized. Now what is capitalized? Look, donation are of many kind. Sometime it is a small donation. So small donation is like, we can treat it as a revenue. We can treat it as a revenue or income. Sometime it does not, it told you like it is a specific, so you have to use that donation on a specific purpose only, okay. And that can be for that you have to create a bank account, and in that you have to credit that money, okay. Some donation are capitalized. Capitalized means they told you to do to transfer that donation into your accumulated fund. So whenever your donation is capitalized, you have to add it in your accumulated fund. So this thing you have to keep in your mind, okay. So in the B part, because A part is explain one use of receipt and payment account, which we have already discussed. In the B part, they ask you to prepare the income and expenditure account. For income and expenditure account, first thing you need to know what is your subscription, okay, and how you're going to calculate it. That is very clear to you, I guess, because we already calculated that subscription account in the very starting, okay. So first of all, for income and expenditure account, okay, so for income and expenditure account, first of all you have to write down your subscription account. So what is your subscription? Subscription balance is already given, already you have calculated it. That is your 21840. From where you get that balance? Here, okay. Here in the subscription account, you're having this value 21840, okay. So you can use that value, because this value, I told you at that time that you have to transfer this value to your income and expenditure account. So in your income and expenditure account, we have to write 21840 as subscription, okay. What else we have? So we have to open our in question in which we are having the income, okay. So income is getting from the entry receipt from marathon. So from the marathon, if there any kind of expenses happened for running that marathon, we have to deduct it. Okay, so for marathon price we spend 80 rupee, $80. So from the entry receipt, which is 2500, we have to deduct this 80 so that we can calculate our income from the marathon. Okay, so what we have to do, we have to write here marathon. Okay, and 2500 minus 80, which is your 2420. Okay, after that, if you're getting any kind of a profit, okay, you have to record it. So for that you need to calculate the profit first. So how are you going to calculate the profit? So profit is when you're running any other kind of a business, for running your day-to-day expenses of your this written NPO. Okay, so for that, first of all, you, because there is a sale of sportswear, so you have to prepare a trading account. Sports sale of sportswear, which is 950. Okay, in that we have to minus cost of sales. So you know how to calculate the cost of sales: opening stock plus purchases minus closing stock. So here it is given to you like inventory of sports equipment. In the second point, they gave you the inventory of sports equipment, which is opening value is 635 and closing value is 665. So I'm going to use that. Okay, so what we have to do, we have to add our opening value and deduct the closing stock. Okay, so opening stock is 635 and the closing stock is 665. Okay, now if we done any kind of a purchase of sportswear, then we have to mention it. Yes, here it is, purchase of sportswear, that is 740. So we have to add 740 also. So by solving that, we get the 710, and this is our positive value. So it means this is our profit from sale of sports wear. Okay, so we are going to use that value here because it's a part of our income. So the as a part of income, we have to write it here: profit on sales of sports wear, which is 240. Okay, so our total income is 24500. After that, we have to deduct our expenditure. So what is our expenditure? Expenditure from where we get to know? From the payment side. Okay, so this is our payment side. Okay, this is our payment side. So the first payment is wages. Wages, we already calculated the final value of wages. Okay, in this slide, we here the amount for the wages is 8,000, which we already calculated. Okay, and the rent also we calculated it earlier, that is 4,600. So we are going to use it here. Okay, so for that, what we have to write? We have to write here rent, which is 4,600, and then wages, which is 8,000 that we calculated. Okay, now we have to find out the other expenses also. Purchase of sports is not our expense. Recurring revenue expense, it is not our revenue expense. Club overhead, yes, Yes, club overhead is our that revenue expense, that was 8780, and repair and maintenance also. Okay, so what we have to do, because we don't have any other information related to these expenses, so we can write it directly, these two value in our income and expenditure account. So we have to write it here: repair, that is 4100, and then club overhead, you know the meaning of overhead. Overhead means expenses, 8780. Okay, after that we have to write down the depreciation, but depreciation for the year ended, mark my word. Because why it is, because we are going to prepare the income and expenditure account for the year ended. Okay, year ended 31st December 2017, which is this one, 2500. Okay, so we have to write it here: depreciation 2500. Okay, after that our total expenses 27980, we have to deduct it from our total income. So if we got a positive value, it means we are in a surplus position. If the value is negative, because here it is clearly stated like this is our negative value, so 3480 is our negative value, so we can write it like deficit of income over expenditure. Okay, so I think this much is clear to you. Okay, in the next question they ask you to prepare a financial position. So for calculating the financial position, there you need to know like what is your accumulated fund, and it was not given in your question. Okay, accumulated fund opening balance is not given in your question. So how you going to prepare it? You have to deduct your liability from your assets, but you have to use only your opening balance for that. So how you going to prepare that? So first you have to write down the statement of affairs, okay, on 1/1/2017, I guess the year. Wait, I have to check. Yes, 1/1/2017 is the year. Okay, so what you have to do, first you have to record your non-CA. So your non-CA is gym equipment, okay, which is 12,500. Okay, where it is given in your question. Gym equipment, here, gym equipment. Okay, the opening and closing both are same 15,625, so we can use that. After that we have to use the other balances, just like cash, bank, whatever we have. So bank we are having, bank we can take from the receipt and payment account, that is 1250. Okay, then we have to take other assets like inventory. We are having inventory of sports wear 635, we have to take it. Okay, then we have to take because prepaid advance is also asset, so 1200 we have to take. Okay, then subscription earlier 840, we have to take it from here. Okay, so this way we get to know like these are our assets. Okay, so for now we are going to do step by step. Gym equipment is done. Okay, after that what we have to do, we have to write inventory. We are having 635 balance. Okay, and then rent, we are having rent prepaid. Okay, we have to use on the balance which is given to you on 1st January 2017, that is your 1200. And then subscription arrear, because subscription arrear is your assets and subscription advance is your liability, so 840. So your total assets is 16425. Okay, 16425. After that you can use your, okay, so okay, we missed some current assets also. Bank we missed. Bank it is 1250. Okay, inventory we already did, rent we already did, subscription arrear we already did. So our total assets is 16,425. Okay, then we have to record our then we have to record our current liability. So what is our current liability? Subscription in advance, but we have to use first the balance which is given to you on 1st 2017. Then wages arrear we have, that is 700. Okay, we have to deduct this. And from 16,425 we have to deduct 480 and 700, that is our 15245. Okay, so 15245 is our accumulated fund on first 17. Okay, so when we came to know like this is our accumulated fund, then we can able to prepare our financial statement, financial position easily. So now we are going to prepare our statement of financial position. So how we are going to prepare it? First of all, you have to record all your balances which is on 31st 1 2017. Okay, so first of all, in your non-current assets you're having gym equipment. So gym equipment is 10,000. Okay, then you have to write all the current assets, inventory, again rent prepaid, subscription in arrear. Okay, so what is your inventory value? I'm going to show you. Please uh, be please make concentration over here. So here, inventory closing value is this much, 665. Okay, 665. Gym equipment closing value is 15,625. Okay, and because why we are not going to take this 15,625, because we already calculated the equipment value, net book value, which is 10,000. That's why I'm taking 10,000. Okay, instead of the 15,625. And then we are having 800. Okay, 800 and then we are going to use these value. Okay, only these value we are going to use. So yes, here, so inventory, in inventory the closing value we are going to record that 665, and then prepaid is 1440, 1400. Okay, and subscription is 1440. Okay, so our total assets is 13505. Okay, after that you have to record your accumulated fund. Now means your accumulated fund and the liability. First of all, you have to record your accumulated fund. So how you're going to record your accumulated fund? What is the balance of opening balance of accumulated fund? You already calculated it, that is your 15,245. Okay, in that there is additional information in which they give us clearly specific instructions related to the donation. So because that donation is capitalized, that's why we have to add it here. Okay, so we have to add 600 here, and we are getting deficit from our income and expenditure account, that is of 3480. If there is a surplus, we have to add it. Okay, so this is my accumulated fund closing value. And now the current liability we are going to use. The first is bank OD from the receipt and payment account 100, subscription in advance, that is 240, okay, and wages in arrear, that is 800, okay. So 1140, and then again my total liability is 13505. So this way you are going to prepare it, pause my video, and then redo it by yourself, okay. Now there is some additional information related to the D part. The D question is, explain the new treasurers has suggested this treated of life membership. Okay, so first of all we have to, this is a theoretical question of 3 marks. What you have to do, first you have to read the additional information carefully. What happened? The new treasurer of the club discovered that the surplus of the previous year ended 31st December 2016 is 23,400. This include life membership 19,000, which has been credited in the full to the income and expenditure account. They credited it fully, okay. The treasurer has suggested the life membership should be credited to the income and expenditure account over the 5 year. Explain why they suggest this thing, okay. What is the purpose of suggestion? Instead of credited in lump sum amount, why they want it to distribute it for the 5 year, okay. So first of all, the life membership should be spread over the year. The member uses the organizational facility, okay, as per our matching concept. If this, because you know this very well, like life membership is for it's a kind of a income which we are going to means use in for the organizational facilities which the members going to be used. So we have to spread it over, okay, because as per matching concept, okay. The second is to avoid overstatement of surplus, okay. If you're going to give the whole amount in 1 year only, then at that year we get a overstated surplus, okay. So prudence concept, as per the prudence concept we cannot do that, okay, like posting 5 years income in 1 year, okay. And the another thing is, this is impossible to judge the accurately, but 5 year is quite common, because every organization when they start, they make a plan for the 5 years, they have the goals of the 5 years. So the another reason we can write it like this is impossible to judge accurately, but 5 year is quite common, okay. Now moving forward to the next question, please. That was the last question, okay. The new treasurer, again this is the same information, but in E part they are asked you to prepare what, calculate the impact on surplus or deficit of a new treasurer suggest for the treatment, okay. What happened if they in the first part, if there is a surplus, okay, the surplus is 23400, it is clearly given, okay, and the full life membership is 19,000. If you're going to deduct it, okay, and then what we have to do, we have to add 19,000 into 1 by 5, that is 3,800 we are, okay. So what we have to do, our revised surplus is 8,200, this is our revised surplus, okay. But in case of the second year ended, in the second year ended we are having a deficit, that is 34,800, and again 19,000 we have to divide it for the 5 year, that is 3,800. And then we came to know like 320 is our revised surplus. Okay, so how you going to, because it is clearly mentioned in this question, the previous year you're earning 23,400, this is your surplus. Okay, and if you're going to record all the life membership 19,000, and which will help, then tracer wants to overcome it, like distribute it in 1 by 5, then 3,800, then your revised surplus is this much. Okay, if you're going to calculate the, if you're going to calculate the life membership on 31st December 2017, then what you have to do, deficit, we are already having that deficit, that is 3480, 34800. Okay, and then what we have to do, we have to 19,000 divided by 1 by 5. So 19,000 divided by 155 is 3,800, and because we are already deficited and the income is 3,800, so we are in a revised surplus, that is 320. So this is the question. I hope you understand this thing. Thank you and have a nice